What's up, everybody? Sal here with Simply Investing. We're back at it again today. I know it's been a while. It's been a very busy summer for me, and we've been crazy busy, but I want to kind of go over some quick market news before we get on with the day here. Unfortunately, we won't be able to do lives as much because I'm just way too busy. Got a lot of stuff going on, so I do apologize there. And Cody also in his new position, really rocking it out with increasing his salary. So he is going to be on and off occasionally. So it's really just going to be me probably for the next probably year until we get our podcast going, which we will be getting a podcast. We're going to do it once a week, probably like on a Friday afternoon or a Friday evening or something, whatever's convenient for his schedule. But I do want to say that thank you guys for all your support. Again, likes and subscribes. You guys have been killing it. We are getting close to 100,000 views for such a small channel and only having under 400 subscribers. As you guys know, our goal is to get to 500. So if you guys can hit that like and subscribe button and share us, it definitely really helps as I give you guys my input and thoughts on what we're going to be doing. So let's go ahead and get straight into the market news. We're going to talk quickly about crypto here. As you can see here, the index here is at 41, kind of like between neutral and starting to get into fear. I think this is still a good time to be dollar cost averaging in. I am definitely dollar cost averaging in. You got XRP still holding 53 cents. You got Solana down to 129. You got Ethereum at 2,300. You got Bitcoin at mid 5,500, 55,000 range. You got Chainlink at 1046. Litecoin back in the 60 range. You got Caspa at 15 cents. And the big player down here, you have Quant, which we're going to talk about in just a second. You got Quant back up to 71. It was in the 50s. If you guys haven't been paying attention, it's been in the 50s for a while. But there's really not a whole lot of news going on with crypto. Right now, it's just the market's anticipating the downturn, which I have been saying we're coming to the bottom of this recession. Now, everybody out there has been saying recession, are we in a recession, are we in a recession, are we in a recession? The thing is we have been in a recession since last year, this time last year, even before that, I'd say around June, July of last year. We've been losing steadily between 700,000 to over 1.3 million jobs per month consistently. It's still climbing as a lot of the zombie companies and everything just kind of peter out, disappear. However, there are some industries like the crypto industry that is still hiring for a lot of tech level jobs and Web3 opportunities for you guys. So there is still opportunity out there, especially in the tech sector. It's just not in a traditional market point. I think data transitioning or migration, those are good jobs. If you guys are in tech, I can tell you right now, there's a lot of companies. I myself, we just migrated my business from one platform to another. They need people to be able to migrate all the information safely and effectively from one platform to another. And I can tell you those jobs are going to be paying like $200,000, $300,000, $400,000 for those jobs because it's a very complicated job. So if you guys are in tech, there are opportunities, but what's really being lost, especially in job wise, I mean, we're going off away from crypto at the moment, but what's really being lost in jobs is really customer service, like the weird operational jobs, these jobs that are overfluffed that they don't need. Like, do you really need like 30,000 customer representatives, or can you run a call center with 100 people? Like, that's what they're doing, and they're just slicing down. Facebook's constantly laying off a few thousand people. You got Microsoft doing the same thing. You got all the tech companies just trimming the fat. Now, the biggest thing, though, is that you're going to see a lot of job loss because a lot of small businesses revolving around the bigger companies like Walmart, Target, Microsoft, all those big companies, those businesses, small businesses that are tied to those are going to go out of business. So as you guys know, like here, I'm in Northwest Arkansas, and Walmart's, of course, building a big corporate headquarters. Of course, there's auxiliary businesses that are attached to that we don't account for, like small businesses like sandwich shops, restaurants, stores by their tailors, shoe stores, dry cleaners, all that stuff is kind of attached to that. So you also have to count when those big corporations go down, those auxiliary businesses around their hub go down as well. But anyway, let's talk quickly about Quant here because there is some great news. We're going to be doing a deep dive on Quant again. I know I've done one 2 years ago with you guys, but we're going to do another one for you. But we are at $71, which I have been buying crazy amounts of quant lately. As you guys know, quant is roughly about 13% of my crypto bag, of my crypto portfolio there. So just keep in mind, I am putting my money where my mouth is right now. So right now, it was just announced a few days ago that Quant is doing staking. We're partnered with another platform. I don't know how much. I haven't really done a lot of research into it, but that is what's causing it to pump right now. Just simply the fact that they are starting to initiate a staking platform. What that will do for the tokenomics, I have no idea. I have to read it, so I will have that in a more detailed analysis for you guys on the next one. But moving over to the stock market, I think is the biggest one here that people are kind of scared of. Here is we have Dow at 40,723, kind of up about almost about 1%. We have the S&P about the same, about 5,400. We got the Nasdaq up about 1.125, like 1.125%, at almost 17,000. Seems like we're still hitting record highs, and there's a lot of hype, especially as you can see here, that they think a half point Fed interest rate cut may occur. Now, me personally, I don't think a rate cut would do any good. We need to calm the sales of homes, especially overpriced homes, because if they do a rate cut and they do a big rate cut, we will see for maybe 6 to 8 months a nice spike up in home sales and business and everything, but we will see a dramatic increase in pricing demand as we still don't have the inventory for more people buying homes, and that's going to cause new homes to skyrocket even further beyond the point where people can even possibly afford them. And you got to remember, people who got their home 4 years ago at a good interest rate, they're not selling unless they absolutely have to, whether it's a death in the family. They have to relocate for their job, and they're not going to give up their 6-figure job. Maybe they have a sick family member and they have to move back to home. What I see now with my moving company is the only moves that are happening are really, we got older people like grandparents moving closer to their kids because I shouldn't say grandparents, I should say new grandparents, because they their kids are their grandkids are like 1 year old, 2 years old. The families are just starting, so they are going to go to they're going to go to that. They're going to go back to their families and be closer, and with daycare going up, 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 because insurance is going up, 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 up. You got the grandparents, grandpa and grandma are going to be the best way to take care of the kids while parents are working, and that's what they're going to do. So I don't see you moving unless you have to for your job. Otherwise, most people, financial common sense thing is to stay put, save and stack your money as best you can. Now, I will say this, that it sucks right now for a lot of younger millennials, Gen Zers, and Gen Alpha coming into it, because they're just now turning 18, I think this year or next year. So you're going to be coming into an economy where it's kind of going to be bug up and shut up. Get your stuff done. Nobody cares. Stop complaining. Get to work. And the whole scam, like I know Gen Z and Gen Alpha are into huge scamming. Those guys are going to wreck themselves. We're going to have a massive overpopulation in prisons too. So it's going to be funny if there's a publicly traded prison company. They're going to be making some money. But the reason why I think the market is overflated, it just hasn't corrected yet, is because inflation is still hitting. Like they say we're under like 2.9% or something like that. The true inflation is more like 4.5% right now, because it's still climbing for certain areas, even though costs of food is going down. Costs of fuel staying pretty stagnant because people aren't traveling anymore, and the cost of goods being shipped around is kind of coming down. Now, we still have a couple bubbles in this economy. One is we got housing bubbles all over the United States, Austin, Texas, Florida, Arizona. We got a crash coming in some sectors. We got sector crashes, not really a nationwide crash, but we got a sector crash coming. Definitely a sector crash. We got a huge bubble happening in the auto loan industry, both new and used. Like that sucker's eventually going to pop. I've never seen it where the buy here, pay here people that give you crappy cars because you have no credit are cheaper than going to the dealership. And it's only a matter of time before, middle class people, those who are middle class, make common sense decisions. They'll get like a slightly used car, which they are now getting better cars at these buy here, pay here for $500 a month rather than go get a traditional banking loan because you have good credit, but your payment's $900 a month. There's ways around it. I'm telling you, there's ways around this economy. You just got to make sense and be able to get to it. I like my trucks. I have no shame in my game. When we buy new vehicles and trucks for my moving company, I don't go down to the dealership. I go to auctions or I go to the buy here, pay here, and I just finance, pay half of it, and pay it off by the end of the year. So that way we don't have to worry about any of those crazy prices or taxes on that stuff. Because I'm getting something with like 20,000 miles, maybe 30,000, sometimes 50. Good pickup truck. You can always get the color you want. They always got ample selection for you guys. So, and auctions, you're getting repos that are now salvage styles because some idiot got into an accident because they were trying to drive it off the repo truck. And now all you gotta do is just fix the bumper, do some cosmetic work, maybe put in an extra $3 to $4 grand worth of fixing, and boom, I got a nice truck to put back on the road. And my monthly payment's like $350. So I see that bubble happening, and I see it's like we're still spending. Like the people as a whole are still trying to spend to maintain their lifestyle. So this kind of stagnation period is going to go on for a few more months. I would say past New Year's. I'd say after February, we would start to see it decline, which is normally the case. We either see significant downturns in stocks either on March or October. And I think March, April is going to be when we start going downhill as the prices correct, as people no longer are buying stocks, people are just holding. And of course, people have to start selling off for taxes. Now, we do have a couple things that could go either way. As you guys know, it is an election year, so it's kind of crazy where everyone mindset is right now because no one's really thinking about finances right now. Everyone's thinking about the election, which is tried and true. A lot of people are worried about the Kamala Harris's capital gains tax and her tax plan and everything for wealthy people, as well as I'm worried about it too. Because what that means is if you're holding a stock portfolio and you have a lot of money, people don't understand this. It's like you're saying it's only for people with a net worth of 100 million or more. But I read the proposed bill. I read what they're thinking. If you have stock assets of over 5 million, which could be most blue collar successful business owners, if you're got 5 million or more in assets on the stock market, you have to liquidate and you have to pay an 18% tax on unrealized gains. So, and if they allow that unrealized gains to come through on those type of capital of investments, it's only a matter of time before unrealized gains comes on your business. Because you can run a $50 million business, you can run a $100 million business and only be worth $3 million. There's a lot of businesses out there that have very low margins but very high volume of sales, and so they get valued high because it's a pretty consistent model. The trade-off is you get low return versus high risk, high yield businesses. So I can see where people are going to get scared because that person is like, how if you tax stocks like that, it's only a matter of time before businesses get taxed on valuation capital gains taxes, which is basically what it is. You have a valuation of $200 million, so we're going to tax you 18% on it. Well, that means the business is not going to be valued at that. It's going to single-handedly destroy a lot of businesses. And I don't think a lot of people understand that. It's just like with the $15 an hour wage thing. We have $15 an hour here in Arkansas. It's not the state minimum wage, but it kind of got pushed up to because a lot of people didn't want to work at a coffee shop for $12 an hour. Well, now all the mom and pop stores are gone. All of them. All of them. We got 7 Brew, Scooter, and Starbucks. We got 7 Brew and Starbucks. That's what we got right now. That's all we got. That's all we got here. So I do apologize. I am at the office. I forgot to put my phone on silent. But so they're all gone. We used to have like 4 or 5 in Fayetteville, a few in Rogers and Bentonville, and a few others like scattered around, and they're all gone. And it's like I said, they could not afford that because a lot of people you guys don't realize is like if you charge $15 an hour, they have a payroll tax of 10%. And for some small business, for restaurants, I think it's like 12.5% is what their payroll tax is, in addition to everything else. So it's going to be an interesting. The election is definitely going to affect. It's definitely going to be interesting. I know I got on a little sidetrack there, but it's going to be interesting because the election is going to have a stake on this economy, and we're going to have to see how it goes because we have the masses of people for Democrats, and we have a lot of the masses of business owners for the Republicans. And I've never seen a divide like that. Usually it's 50-50. Like it's like 50-50 down the public, 50-50 down business owners. But now it's kind of like it kind of got pushed aside, and you got business owners over here, and you got people over here. And you had a lot of people who were on the left that when they started a business and they started making money, they moved over to the conservative side because now it's like blood, sweat, and tears, and you understand what goes into a business. So it's going to be crazy times. I do think the market is going to turn around, but we're not going to see it anytime soon, and it's not affected to any president. It doesn't matter if you're Republican or Democrat or independent. It doesn't matter who we put in office. This has been like a 60-year in the making economy. So, and it's a global economy. We're affected by everybody. So we're going to have to see where we're going. There's really not that much news right now other than we're just waiting to see if interest rates will drop to spur home sales and spur auto sales. But I don't think the wise decision is to drop. I think the wise decision right now is to either raise a quarter or just keep or do nothing right now. Because I think the economy is in a good position. We need zombie companies to go out of business, ones that rely heavily on cheap loans to keep going and cheap commercial paper. We need that to stop. We need companies to be valued based on what value they're bringing to society and their consumers and to the world and to the global economy. But there's a lot of intricate parts. We don't know what's going to happen. And there's a lot of crazy stuff going on because, as you guys know, I don't really talk a lot about influencer stuff, but you got that DOJ going after a couple major influencers with Russia collusions, allegedly. And you got a lot of other crazy stuff going on, which I will talk about in various videos that will be going out shortly. So thank you guys. If you guys made it to the end, if you could like and subscribe, support the channel, it really help. And look forward to you guys next time. Thank you guys.